All right, testing, 1, 2. Hey guys, let me just adjust the microphone here. All right, everybody, welcome back to Walks on Wall Street. Apologize for being late. Very long and busy day today, so hopefully you guys understand. It is Tuesday, June 13th, 2023. It's about 8:58 p.m. and we are reporting live from downtown Miami. We are sitting on the corner of Northeast 10th Street and Biscayne Boulevard, which just so happens to be the location of the very famous 1000 Museum building by famous architect Zaha Hadid. But I think the biggest topic for tonight's stream, it was a very, very busy day on Wall Street. We got some inflation data out. That is correct. The Bureau of Labor Statistics released the CPI report for May, and it actually came in better than expected. So the consumer price index for all urban consumers only rose about 0.1% on a month-over-month basis. That's after increasing 0.4% in April. So not too bad. What I want to do before I go ahead and close my laptop here, I'm going to drop the link in the description so you could view the CPI report for yourself. But on a year-over-year basis, talking about annual, inflation rose about 4%. So, think about how far we've come, right? From the peak levels of almost double-digit inflation in the United States, all the way down to 4%. So as it relates to inflation, we are on the right path. We are on the appropriate trajectory to getting inflation back down to the Federal Reserve's target of about 2%. Now, before the pandemic, if you remember correctly, and it's so funny, we always talk about this because pre-pandemic, the CPI report was hardly even talked about on Wall Street. Not compared to what it is today, right? CPI was just another number. We barely even looked at it. And for a period of time, inflation was actually well under the Federal Reserve's 2% target. They would actually have liked inflation to be a little bit higher. And now with all of the supply chain, I should say bottlenecks in the supply chain that was caused by the pandemic, for obvious reasons, now we're seeing a lot of that supply chain shift back to North America, which we've talked about. It's caused the Federal Reserve to be very, very aggressive in their interest rate tightening policy, right? This is the most aggressive Fed tightening cycle since the likes of Paul Volcker in the 70s, where they had to raise interest rates 20%. Now, tomorrow is another very big day on Wall Street because it is the conclusion of the FOMC meeting. That is correct. The Federal Open Market Committee meeting will conclude tomorrow. If you want to go to the Fed's website, they'll actually be broadcasting live Fed Chairman Jerome Powell's speech, the press conference, and this is when they are going to give an update on monetary policy. Now, after today's CPI report coming in better than expected, futures markets are actually changing. If you remember correctly, 2 days ago, if you looked at futures, there was about a 25% probability the Federal Reserve was going to raise interest rates by 25 basis points. That probability has cratered all the way down to about 3%. So it's pretty much in the bag that the Fed is not going to raise rates at tomorrow's meeting, which means that they are going to initiate a pause in their tightening cycle. However, they will probably continue raising interest rates and pick up where they left off at the July 2023 meeting. So without further ado, we will go ahead and get this stream started. Let me go ahead and close my laptop here and we'll say hello to everybody in the chat. I see Sparks Carnival good to see you. Jeremy, Michelle Henry, Andrew Lee, Richard Vogel, Jay Sully, Brian, the one and only British Gray, good to see you. I see D. Who else we got? Wendy England, Justin S. Teresa Diaz, good to see you as always. Solo 401, Brick Stonewall. Queen of Swords, Lee is here. Star Fox, Alexis, DWG. The ABX girl from the Bronx, always appreciate you joining. All right, let's get started. Let me go ahead and close up my laptop. Now, I got to tell you guys, today in Miami, talk about the stereotypical Miami summer day. This is essentially what I moved here for. It was about 90 degrees today, and I believe 80% humidity. So extremely, extremely hot, extremely, extremely humid. Just how I like it. Now, I posted on Twitter, I said, you know, many of you may think I'm crazy, but, you know, days like today are my favorite days. Very hot, very humid, very tropical. I'll quickly give you guys a nice shot of 1000 Museum. Once again, we are standing directly under the Zaha Hadid building. This is one of the most exclusive addresses here in downtown Miami. Really, really beautiful building. I see FredEx is here. So who's surprised at the CPI report that we got out today? I think it's very encouraging data. Now, again, that was the headline number, right? And if you factor in what the Federal Reserve really looks at, it's core CPI. So, I don't know. I think, and we've been talking about this for a while. That one particular, line item on the report, which just so happens, in my view, to be the most important, which is shelter costs. I would argue that pretty much everybody listening, their number one cost that they have, or their number one expense, is rent or paying your mortgage, right? And we're not really seeing much progress there. We're just not seeing things go up as quickly. But we're not really seeing things drop too much. Hey, Rachel Abreu, good to see you. This is Hey Tom and team, hope all is well. Dan Lee is here. What's up, Dan? Connor says, do you go by Tommy? Maybe, if you want. It's up to you. I got to put you guys down for a moment. I got to put my laptop away. Hold on. All right. Yeah, Brick Stonewall says Gator Cam. Yeah, in New York we call that the rat camera, but there's really no rats here. Haven't seen one gator since I moved to Southern Florida. This is the Paramount World Tower. Really beautiful. DWG says, Tom, I just watched the Peter Schiff with Peterson on May 1. Very long, but interesting. Interesting. So you're talking about Peterson is who? Jordan Peterson? I didn't see that one. I'll have to watch it. What was it, a podcast they did? I'll check it out. Sparks Carnival says gasoline prices fell almost 6% in May and are now roughly down 20% from a year ago. Yeah, and I mean, I think we could sort of pat ourselves on the back there. We're not always right here on Walks on Wall Street, but I think we called this energy trade pretty much to a T. I think we nailed it collectively as a team here. You know, I said the energy trade was over in March of 2022 when crude oil had that massive blow off top, trading at about $130 a barrel. You know, we've corrected, I think, at its lows down to what, 65, 68. We've rebounded some, but, you know, gas prices are coming down. Crude prices have collapsed about 50%, and that's really, really helped bring CPI down, right? Energy costs are down a lot. But again, I think my concern is mostly around shelter costs. So once again, if you type !CPI in the chat, so once again, !CPI in the chat, the Nightbot will drop the link to the Bureau of Labor Statistics website, where it'll give you the actual CPI report. Now, it's very important to go through this report and look at the particular line items that are showing improvement, some that are not showing improvement. And shelter is still very, very expensive here in the United States, that is for sure. Hey, Ryan Beck, what's up? Happy CPI Tuesday. Ryan Beck's core was 5.4 on the forecast to 5.3. Year-over-year CPI was 4 versus 4.1. Yeah, so coming in below expectations for sure. You know, the market had a pretty good day, rallied again. It was S&P was up a couple points. Now, I posted some charts on Twitter, and I think it's important to note here, as we're coming up on the Freedom Tower, that this rally, we're very extended above the 50-day. However, if you go back through stock market history and you study market conditions as we're emerging out of a bear market into a new bull, that's usually when you have the most, I should say, gross extension over the 50, is right when you're transitioning from that bear to the bull, right? So if you just pull up your Bloomberg terminal or TradingView or whatnot, on the S&P 500, all of the major moving averages have now crossed bullish. You could call that a golden cross. I think the market is looking forward. Well, the market always does look forward about 6 months. And we're not too far away off the highs on some of these indices. So what I would like to see, if we had a perfect scenario, right, perfect world, the summer, for those of you who don't know, but we've reviewed this before, we review it every year. In the summer, volume tends to dry up across the board on all the exchanges. Why? Well, mainly the big players on Wall Street are either, taking vacations, they're out in the Hamptons, they're in Connecticut, right, traveling all over. So volume, and it's called the summer doldrums, right? There's not too much activity in the summer. So if the markets can correct here a little bit, if the S&P 500 can give back some, pull back to its moving averages, right, the 50, the 200, and the 100, I think that would be a very, very bullish setup moving into fall. Now, I was talking with a couple fund managers over the past week, and we'll talk about the specifics of what we discussed. But what everybody's looking for right now is to watch the digestion. If the market pulls back and we just have a normal pullback on normal volume or even light volume, the market's probably going to catch a big bid at the 50-day. And that would actually potentially be good point of entry to either add to positions or do whatever you got to do, right? Not financial advice, but just talking about, how traders perceive things oftentimes. So I don't know. I mean, what do you guys think? I wouldn't be surprised to see some profit taking here, especially as it relates to a lot of the mega caps. Take a look at Apple, ticker symbol AAPL. Apple is trading near all-time record highs. I think we'll probably see that give back a little bit. Microsoft, all the big mega cap tech names, they've rallied, 30-40% off the lows. I think a lot of people are going to take some money off the table here, which could set up a nice pullback. Whoa, where the heck did this building come from? I feel like this building just went up overnight. Check this thing out. All right, let me catch up on some of the chats here. Yeah, Ryan Bex's Nvidia is at 410. Talk about a wild move in Nvidia. Organic Soul says, love my town. I love it too. Sparks Carnival says, I hope there's no November 2021 style drop-off. Ryan Beck says, I think things are really interesting if the Fed goes against expectations tomorrow with the raise, sort of like Canada. Yeah, that would be interesting. Yeah, that would be interesting. I mean, if you look at futures markets are essentially giving a zero probability that the Federal Reserve is going to raise interest rates tomorrow. Let's get out of this guy's way. I would be very, very surprised if they did, if they went against the grain and did that. What I believe they're going to do tomorrow is take a pause and pick back up where they left off in July. Notice all of the new development going up here in Miami. I feel like the last time we came over to First Avenue, this building was built, but this building didn't even start construction yet. It feels like this building went up in like 3 days, doesn't it? It's kind of wild just to see all the construction. Again, I'll take you guys past the front of the Paramount World Tower, but I bet you anything there's going to be a huge, super tall structure going up right here. You see a lot of the retail stores finally starting to see some tenants. I remember the last time I took us on a little bit of a walk here, they were still building this entire thing. It looks like you have a Lululemon that just went in there. It looks like all of this is still under construction, but kind of cool. Justin S says, why do a 1 month pause? I feel like that wouldn't be enough time for a pause to see if inflation continues to decrease. Well, I think it's more along the lines to not freak out the market and to freak out the financial system, right? Because you got to understand, let me just cross here. I want to show you guys the front of the Paramount World Tower. Now, to Justin S.'s point, why only pause 1 month? That's not really going to, that's not really going to allow a lot more data to come through. Well, I think what the Fed is more worried about is the financial system breaking. And we've already seen that, in a freaking massive way, starting off with the Silicon Valley Bank collapse, which has sort of created this domino contagion effect with all of these regional banks collapsing, right? So there's a lot of commentators, or I should say analysts or economists on Wall Street, that always use the terminology, the Fed is going to go until it breaks something. And you could argue that the Fed has already broken something along the likes of the regional banks and Silicon Valley Bank. Because you got to remember, the main reason why Silicon Valley Bank went under, yes, it was a classic bank run, but why was there a bank run? Again, the management at Silicon Valley Bank plowed something along the lines of $80 billion in the mortgage-backed securities when they were yielding about 2.5%, right? So it's a lot of money tied up in those securities, even though they're safe securities. But you got to think about the value of those securities as they're marked to market. The Federal Reserve has raised interest rates over 500 basis points, about 525 basis points. This is the front of the Paramount World Tower. So as those interest rates go up, the value of those bonds go down. So when everybody wanted their money back at the same time, well, problem is Silicon Valley Bank didn't have the money to give them, so they were forced to sell their assets. Problem is, if you want to sell those mortgage-backed securities, you're not going to be able to get parity or essentially sell them for what you paid for them because rates are literally 500 basis points higher. So in a way, the Fed, I guess you could say, caused a lot of that contagion. But then again, this is you're going to have ramifications of 14 years of ZIRP, which is zero interest rate policy. So it's not just Silicon Valley Bank, it's a lot of these other regional banks too. And I think the reason why a lot of these regional banks are taking a huge pounding is because they have the most exposure to commercial real estate. And what's going on in commercial real estate right now? Well, vacancies are exploding. And that's a big problem, right? Because if you're holding a lot of this debt and tenants either aren't paying or you can't find tenants, well, I mean, doesn't need a genius to explain it. Hey, Ibrahim Azam, what's up? Oh, that's awesome, man. Yeah, I saw you posting something about that, your computer science course. I would double and triple down on that, dude. And you are so young. If you double and triple down on computer science and just STEM in general, I mean, you're gonna be a freaking rock star, dude, by the time you graduate college. That's awesome, man. Hey, Zozo Bob's, his Miami World Center has over a dozen high-rises planted here. Very nice. Brick Stonewall says, I could see profit taking if you still feel that a recession is imminent in the near future. Organic Soul says, all this is going to be high-rises. Interesting. Sparks Carnival says Lululemon is also absolutely unstoppable. Lululemon's collection or connection with its fans is so strong, and it's managed to grow through difficult economic times. Yeah, I'll tell you a quick story about Lululemon, and I think you're spot on, Sparks Carnival. Lululemon is an unbelievable brand, and I know a particular fund manager who has had a massive, I'm talking about an earth shaker position in Lululemon, has made ridiculous returns for clients. And he told me, he's like, here's my thesis. Lululemon is, in general, right, very popular in the, I should say what, athleisure, mainly for women. Right? Not exclusively for women, but mainly. I think that's how it started, right? Canadian company. He says, I'll sell the stock when they're about 50 to 60% penetration rate into the all-male market. And I don't follow Lululemon to the T. However, from what I understand, Lululemon is trying to make a big push into men's clothing. So assuming they can have the same results with a whole other demographic, with a whole other audience, so to speak, I mean, profits could easily double, right? I don't know, any men in the chat are customers of Lululemon? Or have the clothes, bought the clothes? Because from what I understand, it's predominantly, or it was perhaps a predominantly female brand. Is that right? There you go. Ryan Beck says, love their shorts. Yeah, so I mean, I would assume that the penetration rate is low into the market for men. Who knows? Yeah, FedEx is not even close. Hey, Mike C says, Tom, don't let, yeah. Connor says, Walks from Wall Street. I bought a pair of shorts a few weeks ago, and I plan on buying more of their products. There we go. And how recently did you start buying their products? Here's another high rise going up. Dan says, I know 2 of my male friends that buy from that store. So the contagion is spreading. Hey, Hawaii says, Aloha Tom, love the Lululemon Outfitters. Thank you for sending me the video, by the way, of some of the problems that are going on in Hawaii. It was a really good video. You can feel free to put it in the chat here. I believe it was called Priced Out of Paradise. It was like a mini documentary series, only like 10 minutes, but it was an awesome video of just what's going on in the housing market in Hawaii right now. Oh, it looks like we're going to see a train rip through here in a minute. Now I think this is these are the freight trains. Hold on, I got something in my shoe. Let's see what comes through here. Connors just walks from Wall Street. I've known about it for a long time. I just got my first pair of shorts and it's the best pair I've ever had. I may have to buy a pair of shorts from there. Looks like we got the cargo or freight trains coming by. This is a really cool shot, and you can see the City National Bank of the Miami Tower in the background. Dan says, well-known brand for women and starting to become popular around men's. Well, maybe my friend is right. I mean, he told me, he's like, look, I have it in a family trust. He's like, I own the stock and a lot of it in a family trust. And he's like, I'm not going to sell any of it until they're about 50 to 60% penetrated in the all-male market. So this is the Freedom Tower here. It's kind of cool seeing this. You really don't get to see this in New York too much in terms of the big freight trains coming by. Wendy England says, I was buying Lululemon when it first came out. Awesome. Mimi says, hey Tom, I've been to a free yoga class at Lululemon a long time ago, so I know the company. It's been around for some time. Dave S says folks are being priced out across America. Yeah, I mean, Dave, you're not wrong, right? You're not wrong. And that has been my biggest concern as it relates to inflation, right? As it relates to the CPI report. So even though inflation is improving, once again, if you want to look for yourself, if you just type CPI in the chat, scroll down about a third of the way through the page and look at shelter costs. Not too much improvement there. You can see the Metro Mover coming across. I wonder how long this train is, man. It feels like it goes on forever. Now, what I want to do today is take you guys down here to Miami-Dade College, where they have the Miami Bull. So we do have our own version of the bull, but it's more of a techno bull, I guess. Wabi, what's up? Good to see you. Now, another thing I wanted to briefly mention, and I brought this up to a really good friend of mine. I said, out of all the managers, out of all the hedge fund managers you talk to, how many would you say have long exposure to Japan right now? And he's like, none. And nobody ever talks about having long exposure to Japan or owning Japanese equities. Well, if you go to my Twitter account, if you follow @WalksWallStreet on Twitter, I posted a chart, and I think the tweet, I'll sort of paraphrase what I said, but I said this is the most underfollowed trade potentially in the entire market in terms of the global equities markets. The Japanese stock market, this is finally the end of the train here, finally. The Japanese stock market hit an all-time record high at the end of 1989, right, 1990. And it has yet to fully recover. However, I want you to go ahead and take a look and zoom out on a monthly time frame. All right, let's finally walk across here. That was probably one of the longest trains I've ever seen in my life. So I want you to go ahead and look at the Japanese indice and zoom out on a monthly time frame. Japan has been outperforming the United States and a lot of other equity indices, especially emerging market countries. And I think a lot of people are very, very underexposed. Now, I get it. In Japan, if you think about central banking and monetary policy, Japan, or I should say the BOJ, right, the Bank of Japan, is really the only central bank that is bucking the trend as it relates to tightening, the tightening cycle. So you have the Federal Reserve, who we're going to hear from tomorrow, right, at the conclusion of the FOMC meeting. You have the Bank of Canada. You have the ECB. We'll go this way. And you have the Bank of England, all tightening or raising interest rates. But I want you guys to do a little bit of research. Look where rates are in Japan right now. They're still negative, right? And Bank of Japan is continuously buying assets and buying assets and buying assets, and that's fueling this big bull run in Japan. So I would watch it very closely. I think it's very much underfollowed. I think we're about maybe 17% away from the all-time record high set in 1989, 1990. And if we break out and break through on really crazy heavy volume, the measured move on that is like the stratosphere. It sort of reminds me of a lot of these tech stocks that all topped in 2000 during the tech and telecom crash, right? If you do your research, think about how long it took Amazon to reach all-time record highs again. Think about how long it took Microsoft, right? Everybody is crowding into Microsoft and Amazon, but it took Microsoft almost 10 years, a little bit over 10 years, for them to reach back to all-time record highs. And notice what Microsoft, notice what Amazon did when they finally broke through their 2000 tech and telecom bust record highs. They doubled and tripled. So, I don't know, any thoughts there? I wanted to bring this to you guys. I brought it to a lot of my friends who run significant money and who manage, you know, firms and funds on Wall Street, and they're like, yeah, we don't know, nobody in our sphere owns or has exposure to Japan. Any thoughts there? And we're about to come up on the Miami Bull at Miami-Dade College. Ryan Beck says, when Buffett talks, and he talks a lot about Japan, I listen. All right, what do we think about the Miami's version of the Mighty Bull? Thumbs up, thumbs down on this guy? What do we think? And it is right on the campus here of Miami-Dade College. Chinook wins. Yep, that is true. Zombie market. Bank of Japan owns most of it now. Exactly. But this thing is cranking, and it's approaching all-time record highs. Now, again, that makes sense, though, right? That kind of makes sense, because the U.S. equity market, and I should say markets around the world globally, started to take a really bad hit when it didn't have the Federal Reserve's wind in its sails, right? There's a direct correlation. That was a really good comment by Chinook Wins about the Bank of Japan zombie market and the like. You can kind of say the same thing about the United States. I want you to do something. This is a pretty good exercise as we're looking at the mechanical bull here. Pull up the Federal Reserve's balance sheet. And you could actually do some back testing here. And from the lows of 2008, I want you to compare the growth trajectory of the Federal Reserve's balance sheet to the S&P 500. Starkly similar, you know, one-to-one correlation. As the Federal Reserve has expanded its balance sheet, which mainly consists of mortgage-backed securities and U.S. Treasuries, that has provided massive amounts of liquidity in the market, and equities went skyward, right? All that coupled with artificially suppressed rates, and Japan is doing the same thing, but they're doing it more. So this is the mechanical bull here, Miami's version of the Mighty Bull. Sparks Carnival says Amazon and Etsy are two very different companies. I love them both. Etsy is more along the lines of small business, like crafts things, right? Like arts and crafts, I guess. Dan Zhang, what's up, man? Says Tom, does Florida rain almost every day in the summer? We got a bike club here. Yeah. Look at how tall that one is. Dude, it does. Yeah, Gina Thomas says no balls. That's true, it doesn't. It's mechanical. So we shouldn't assume the bull's gender. Don't cancel me, we're just making a joke. But yeah, this thing is pretty cool, man. This thing is pretty cool. It sort of looks like a transformer from the movie, right? The hoofs are crazy. This thing is crazy. They have it roped off, so I don't want to touch it, but that thing looks cool. So this is Miami-Dade College campus. Now, I got to give a shout out to the Economic Club of Miami. If you're thinking about moving down to South Florida, particularly Miami, and you're in business, maybe you own your own small business, or maybe you're just, want to be a part of it, please join the Economic Club of Miami. I was invited to attend an amazing event. They always put on really, really great events. And I had the pleasure of sitting in on sort of like a mini podcast, like TED Talk, right in this building. It was about, I think it was almost a year ago now, I can't even believe that. Between the mayor of Miami, right, who we all know and love, well, most of us, and Ken Griffin from Citadel Securities, who have actually just announced about a year ago that they are moving all of their operations, or I should say their main headquarters, from Chicago down to Miami. It was a very, very good and informative talk right here at Miami-Dade College. This is the Financial Technology and Trading Lab. As you can tell, all the ticker tape flipping by. Hey, Palantir. Palantir is now on my watch list. I posted that on Twitter, by the way. After being crushed. That was another company that's been crushed, like down 90%. Lumen Technologies, Bank of America, Brian Moynihan, Tesla, ProShares Ultra TQ, triple Qs. Let's see if they got any Bloomberg terminals up and running here. Oh, this is a National Center of Academic Excellence in Cyber Defense. You will always have a very good job and a high-paying job if you choose to major in cybersecurity and the like. Now, the college I went to, John Jay College of Criminal Justice, has a really, really good cybersecurity program, and it has extremely high placement rates into the federal government, the FBI, CIA for cybersecurity. A lot of my friends are doing that. Really solid, high-paying jobs too, right out of college. But yeah, this is the Business Analytics Lab and the Financial Technology and Trading Center right here in Miami-Dade College. Yeah, Sparks Carnival says love Palantir. I mean, the thing about Palantir for me was very, very overhyped IPO, and it sort of turned into one of those meme style stocks, right? And that's why I never touched it, and I never even paid attention to it. But once a lot of these companies get washed out, and when I mean washed out, down 90%, literally these stocks were down 90%. Okay, then I'll pay attention. Then I'll sort of see once the dust settles. This is new. Look at this, Artificial Intelligence Center. Wow. This is actually really impressive. You know, the mayor of Miami is so focused on innovation, technology, bringing the best and brightest people to Miami. And he's definitely doing it. This is the Artificial Intelligence Center. Very cool. You know, you need one of the main reasons historically why, you know, a city like Miami sort of lagged behind, right? The likes of New York, even Silicon Valley, a lot of, you know, Boston, is because of the education infrastructure. And now you're starting to see a lot of that infrastructure being laid in terms of the groundwork. So, you know, I think companies are going to feel more comfortable with moving down here because the recruitment pool will be a lot better, right? If you think about some of the reasons why New York, Boston, and even parts of the Valley are always, well, have always been, right? Things are subject to change. Such a great place to do business is because of the talent pool, right? Think about all of the Ivy League institutions on the East Coast in the United States, in and around New York. I mean, New York State, you have Columbia University, you have Cornell University, you know, Boston, you have, you know, the best Ivies pretty much in the entire United States there. So it's so critical for a city, in order for them to thrive, you need a talent pool to recruit from. You know, many of the most sought after and most, I should say, coveted jobs, right? If you want to work on Wall Street in, you know, investment banking, or if you want to work at a big tech company, they recruit out of the top 50 schools, generally speaking, right? Now, it doesn't necessarily mean if you haven't gone to those schools, you can't break into the industry. It's not what I'm saying. But generally, you know, all of these major banks and big tech companies tend to recruit from these big top 50 schools, as well as a couple schools in Canada, like, you know, University of Waterloo and the like. Yeah, Ibrahim Azam says Massachusetts has one of the best education systems in the country, both private and public. Agreed. Agreed, my friend. Yeah, Blues Writer says, Tom, just noticed JP Morgan was offering 5.5% short-term CDs today. They have been selling 5% plus CDs for a while. Maybe those takeovers are having a bigger impact on liquidity than JP Morgan Chase expected. Maybe, but I think it's really, hold on, let me cross here. I want to show you guys the Berlin Wall. There's actually a little piece of the Berlin Wall right here, and on the campus of Miami-Dade College. You know, what I think it is banks are really going to have to compete for customers, because people are starting to notice that they can get, you know, better yield elsewhere, right? Why would I keep my money in a bank when I could just go to Treasury Direct and buy a 1-year US Treasury that's going to yield me over 5%, right? So banks need to start being competitive with interest rates, or they're going to see massive capital flight, especially with all the banks failing. So I also think that's another reason why some of these banks were in trouble, and sort of what caused the bank run, I guess. I mean, just think about, from your perspective, if you leave your money in a checking account, JP Morgan Chase checking account, and you're like, you know what, I'm not making any money on this. And then you start to do your research, start to read some articles, right? Maybe you read the Wall Street Journal or Barron's or Investors Business Daily. And you're like, oh my gosh, I could go to Treasury Direct and I could plop $1 million in a 1-year Treasury bond, and I could make myself $50,000 risk-free rate of return. I don't have to worry about any market volatility or nothing. Sign me up. I think that is also another major reason why you've been seeing these big, I should say, capital outflows from banks. Also look at money markets, right? I'm sure many of you have brokerage accounts through Charles Schwab or Interactive Brokers or Fidelity, or name your broker dealer, right? Doesn't matter. You can get a money market for 5%. Just have your money sitting in cash. So, yeah, it's all good points. Hey, Yogi. Yeah, that is cool. I wonder how they managed to get a piece of the wall over there. I'm not too sure. I only just found out about it about a year ago that they actually had it there. But it's cool. It's cool to visit. Valerie Rogers says everything is falling. Just pay attention to what is happening all over the world. Interesting. Hey, Western Mass Dave is here. What's up, Dave? Always a pleasure to see you, my friend. TC says I moved all my saving to T-bills. Not a bad idea. I mean, not a bad idea at all. 5%, and the reason why I say 5%, generally speaking, because if you just look at the 1-year treasury, if you just go to cnbc.com/bonds, you could see the entire yield curve in real time. It's not a bad deal. Right now, have equities outperformed? Yes, they have. Equities have rallied and continue to rally, and we're probably in a new bull market. But for people that may be living on a fixed income, they don't want to deal with the volatility. They've sort of had it. We're finally at a place in America where we are rewarding savers again. And I think that's a good place to be. Sparks Carnival says Ray Dalio thinks U.S. is on the brink of potential late cycle debt crisis. Yeah, I mean, potentially. Now, the way I think about it, and I would recommend everybody to read his book, Principles, very good book. Principles by Ray Dalio. Also, Changing New World Order by Ray Dalio is also a great book. But, the way I look at it is you got to zoom out as well, right? You got to zoom out and look at the financial situations of some of the other countries in comparison to the United States. It's not just the United States that's in trouble here. All the way in the distance, you could see the Aston Martin building. Top left, you could see 200 Southeast Financial Center. This is Northeast 1st Street. Seems like every street down here, as we get closer to Brickell, is under construction. I think Flagler Street is where they're building everything up really nice. GB says you have the audio version. Very good. Yeah, DWG says Peter Schiff always thinks gloomy. Look, I like Peter Schiff a lot. And I think he has a great podcast. And I also think he's a great economist. But where I think Peter gets it wrong, well, I should say this. I'll rephrase it like this. Peter is right. Peter Schiff is correct. But you could be very early, right? You can call a crash every single year and you're going to be right at some point. But if you look at the data, right, if we want to put our quantitative hats on for a moment, if you're a quant, you could do the research and pull the data. What percentage of the time is the market going up? We'll just talk about the United States. As it relates to the S&P 500. The market's going up about 70% of the time. So statistically, right, if you're actually a trader and you're a good risk manager, if you're short all the time, you're stacking the odds against yourself because the market is generally going up over 70% of the time. So did Peter Schiff call the 2008 financial crisis? Yeah, he did. But he's also never been long U.S. stocks once since the lows of 2008. And if you were long the U.S. equity market from the lows of 2008, well, your net worth has probably exploded and ballooned. So Now this is the new food court. I think it's closing. Right on the corner of East 2nd Avenue here. Hey, Ol is here. This is hello from Russia. Good to see all of our friends from Russia. Welcome. Fund feeds, what's up? Dan says value is what you get, price is what you pay. The U.S. Current valuation is 72% overvalued. That's why those people are negative on the United States. Yeah, but I think also, it's a good point, but things are expensive for a reason, and things are very, very cheap for a reason. And what I believe is markets look for stability, and think about what's been going on over the past, I don't know, 2-3 years. I mean, do you want to invest your money in Eastern Europe right now? Probably not. Do you want to invest your money in some of these emerging market countries that have 100% inflation? Probably not, right? Probably not. So I think you're seeing just not only US investors, but globally crowd into the United States because it's sort of like the safest place to be. So I don't know, I always think back to, this fund manager told me one time, he's like, things can get much, much more expensive than you would ever believe, and stocks can get so much cheaper than you could ever imagine. And again, generally speaking, stocks are expensive for a reason most times, and cheap for a reason. All right, let's cross the street here. Hey, Golden City, good to see you, my friend. Welcome. Dan Zhang says Peter Schiff's Euro Pacific Gold Funds rating has always been pretty low. Yeah, I mean, I don't know. I think I don't really want to dump on Peter Schiff too much, but you're right. I mean, if you were just going to buy, because Peter Schiff buys a lot of gold miners, right? A lot of precious metal mining companies. Look, if you want to just invest in that fund and, pay Peter the management fee, sure, go ahead. But you could probably just pick these yourself. Dusty Cole says only 10% of Americans invest in stocks. Is that accurate? Well, I think what you're referring to is, you may be right, but I think what you're referring to is 10% of Americans own 90% of the equities or 90% of the stocks. And that is a very scary statistic. And we've sort of talked about this multiple times. And this sort of plays into my thesis of the creation of a two-tier society, right? So many people would argue, well, the market is up so much since the lows of 2008. The United States has had such a great recovery, a great economic recovery. Well, yes and no, and not so fast, because if you think about it, and this is Miami Tower right here, the ultra wealthy, and I should say the top 10% of Americans, got just like inconceivable amounts more wealthy during this bull run. But the bottom, I should say, third of America really didn't participate in terms of capital appreciation. But they may have gotten better jobs, higher wages. However, if you look under the surface, they don't own the assets that are being inflated. So a lot of times when we talk about inflation, like which we were talking about tonight, inflation, the CPI is coming down at about 4% year over year in the United States. There's also something called asset price inflation. And over the last 14 years, the Federal Reserve has artificially suppressed interest rates, and they've expanded their balance sheet. They've gone on a bond buying binge, right? Buying mortgage-backed securities, treasuries, and that has sent asset prices to Mars, right? Look at the valuations of US equities. Not only equities, but look at real estate, right? The one thing in the CPI report today that's not really showing too much improvement, unfortunately, is shelter cost, right? there's a housing crisis in America. I mean, just check out that video that our friend Hawaii sent in the chat. It's called Priced Out of Paradise. I just got a report out from Douglas Elliman. The median rent in New York City just hit another all-time record high again. So if you think about the people who own these assets, it's great for them. If you own investment property, if you own your home, it's great for you because the valuation of your home probably doubled, if not tripled, over the last 15 years. But to Dusty Cole's point, the lion's share of Americans do not own stocks, do not own their own primary residence, and don't own real estate. So as you think about those asset prices being inflated, it's great for the top 10% of people who own those assets, who've got filthy rich, but not so great for everybody else. So it's a good point. Hey, Gail Arnold, what's up? Always a pleasure to see you here. Evan Weeks' labor needs to own more of the value, in my opinion, as a matter of law. Interesting. Sam Miguel says, Tom, is there a solution? Oh, let me scroll back to your comment. Is there a solution to fix the middle class in America? Yeah, I mean, I think it's more along the lines of, and I don't know, I don't have all the answers, right? I'm just trying to figure things out myself too. But I think artificially suppressed interest rates, sort of going back to our Peter Schiff conversation, has done more damage to the middle class than has helped it. Right? It may give you the appearance of wealth, right? Everybody's employed, you look to the unemployment rate, but generally Americans don't have much savings. So Daryl says $100,000 is considered low income in New York City. I don't think that's true. There's a lot of like clickbait titles and things like that. Especially you see on the mainstream financial channels, like, hey, $100,000 doesn't get you anywhere in New York City. I disagree with that to some extent, because everybody tends to forget that there's extreme impoverished parts of New York. I think a lot of people forget that. You go to parts of Brooklyn, Bronx, Queens, the outer boroughs. Some people are living on, $20,000 a year. Now, if you're making $100,000 in New York City, are you going to be able to buy the same amount of things as if you were living in a flyover state somewhere, or Arkansas, or anywhere? No. But coming from experience, if you're a single person and you're making six figures in Manhattan, if you can't live normally, that's your own fault, in my experience. That means you're going out partying every night, you're blowing your money. You can get an apartment, okay, a studio apartment on the Upper West Side of Manhattan for $1,900, $1,850, okay? If you're diligent and you put your money away and you save, you can save the vast majority of your income, all while being in the #1 place in the world to build your career and build out your network. So, again, I get it, trust me. I've been in New York all my life, all my working life, working and making money, and the taxes are extremely high, but I would say the trade-off is worth it, in my opinion. Hey, Dan says, compared to other countries that have large savings accounts versus spending, example, China, 44.9% of people People's incomes are saved in retirement accounts. That's building wealth. Wow, Sam, that's interesting. Sam says, I've lived in a stealth van. Wow. I respect the hustle. I respect the hustle.
Effort.
Yeah, Dusty calls this cost-benefit analysis. I think that's with anything. Let's see if we see any fish over here. Dan says, I've made that mistake in 2019, went to bars and clubs with my friends every week, thought it was good for networking. You can never network after a few shots. Yeah, I mean, it's okay to go out and have fun and you know, live your life. There's nothing wrong with that. I don't think that's necessarily a mistake. I think, you know, it's the old saying, too much of a good thing is a bad thing. And let me tell you something, New York City, there's a lot of distractions. Okay, I think we have a lot of New Yorkers in the chat. If you are a young working professional, male or female, there's a lot of distractions in New York. So that's another reason why it's, you know, so expensive. I think there's also a lot of social pressures too. You know, you meet people at work, you want to go out after work for dinner, things like that. All that adds up. It's an expensive city, for sure. I mean, Miami's no different. There's a lot of distractions here too. I always try to live by the saying, if you pay the price today, you'll be able to pay any price tomorrow. I think that's how the saying goes. I may be butchering that. Wow, we've already been streaming for an hour. That's wild. I feel like we just started. I may have to cut it short tonight because I got to wake up extremely early tomorrow. Ah, who dat Dave? I think that's it. Live like no one else so you can live like no one else. What is it called? Delaying the instant gratification. But tomorrow, I promise we will be back to our 2-hour stream. I want to get you guys to South Beach. I couldn't make it there today, but tomorrow is going to be a big day. Okay, it is Fed Day. Officially, the FOMC meeting is tomorrow. We're going to talk about what Federal Reserve Chairman Jerome Powell says. Maybe he'll give us some direction onto what they're going to do at the next Fed meeting. But I think I'll end the stream with this. Let's get some predictions in the chat. What do you guys think the Fed is going to do tomorrow? Do you think the Fed is going to raise interest rates? Do you think we're going to get a pause? Or do you think they're going to cut? Now, I think we're going to get a pause, and I think we're going to pick back up where we started. I should say where we left off in July with another 25 basis point rate hike. But I think we're going to pause here, especially after a better than expected inflation print today. But let me know. Jafet Perez says pause. Austin City Limits says pause. Wow, Ryan Beck with the contrarian here. I appreciate that, and I respect it. Who dat Dave says I think a 25 basis point hike. Yeah, almost everyone says pause. Jeffrey says pause. Hang with Mark Mom says, I am hoping to pause in interest rates. Brendan O'Brien says, pause with stern yet hawkish language. Dan Zhang says 25 basis point hike and then pause. We'll see. Well, once again, futures are pricing in literally a 9% probability we get a hike. It was 25%, but after inflation came in below expectations, the market readjusted itself. So we'll see. We'll see what happens. You know, I think this is going to give a little bit of a reprieve in the mortgage market. You know, maybe that could stir some home buying if people, you know, see that the Fed is going to pause and then potentially, you know, go big at the next meeting. Maybe they'll say, you know what, I was thinking about, you know, buying that property or purchasing our condo. Maybe I'll move on it now because rates are low. You know, people think like that. And, you know, maybe they want to get ahead of the curve to sort of beat the rate hike next time or next month. We'll see. We'll go over a lot of the housing data. We'll see if there's any correlation there. We'll do some back testing. NAV 407 says pausing would be the correct decision. Yeah, I agree. I'm laughing at Blues Writer's post here. Steve CR says, yes, I talked to a realtor. She said sell now. Well, I mean, I don't think it's a bad time to sell. I mean, prices are still elevated. I mean, if you've made a lot of money on your investment, I mean, it's not the worst time to sell, right? It's not the worst time. All right, team, I got to cut you loose here. I got to get to bed. I got to wake up early. But I will see you all tomorrow for Fed Day. I wish you all luck tomorrow, and if you're you know, trading this market, already in the middle of the week, we'll meet back here hopefully in South Beach as we talk about the FOMC meeting and maybe do a little bit of a deeper dive into what is it called, the CPI report. Hang with Mark Moss, as realtors always say that. I thought it's realtors always say it's a great time to buy. Maybe not a great time to sell. All right, guys, take care. Ryan Beck, appreciate it. Austin City Limits, Brick Stonewall, Broadway. Thank you so much. Who Dat Dave, Gary, Laura M, Mimi. If you guys enjoyed the stream, feel free to give a like on the video. Subscribe if you're new. Connect with us on Twitter. And the links were in the descriptions. And we'll see you tomorrow. Remember, there's always a bull market somewhere. You just need to know where to look. See you guys tomorrow.